Good afternoon this Thursday, March 3rd. Limit up again today. 6 of the last wheat sessions have had a limit trade. One of them was down, but the majority of them are up. And of course, it's all the rage now that everybody wants to own wheat and it can only go up. Well, here's how insane the actual news is. As we had anticipated, and we've been saying, looking for wheat to go up into the opening of March. When wheat was down at $8 and everybody was panicking that we missed all the highs, I said, cyclical, we had another run, a wave 3, which are dynamic, would go up into the opening of March. And here we are, vertical in the opening of March, and nobody will consider selling it. Well, here's what's prevailing. I seen on a financial news network today, Fox Business News, they had the head of an ETF that trades the wheat. And he said the reason why wheat's going so sharply higher is because there's fears now the wheat won't get planted in Russia and Ukraine. Now, this is a professional. You can go Google. Don't believe me, but you can Google up. Ukraine's production of wheat is 95% winter wheat. It's already planted. It just needs to green and grow. The Russian winter wheat crop is 70%. Siberia grows the spring wheat because they're a little bit colder than North Dakota, Saskatchewan, and Manitoba, and there's some days we don't think by much. But given that, the wheat is already in the ground. So the true argument is about how the Black Sea region now, at the moment, is knocked out of the export market for the time being. Could it be 3 months? Could it be 6 months? Or maybe 9 months? The point is, by the end of this year, you're going to see this wheat that has not been vaporized by nuclear bombs, that is still available, is not going anywhere. But the worst part about it is it's not like we're talking, years worth of wheat. We're talking about 100 to 150 million bushels of wheat Ukraine had not sold yet of old crop. And they sell out all of their wheat. They only keep about a 5% stocks to use ratio, or we'll keep about 15%. So the reality is they were almost sold out of wheat anyway. So what are we fighting over? We have the paranoia of what this basically 3 million metric tons of wheat could have done to the marketplace, and now they got to go somewhere else and find it. And the dislocation has created this hysteria. What is the true price of wheat? Well, the panic doesn't know yet. But what we do know is it's going up as fast as it will likely come back down again. And this is an awesome opportunity to forward sell new crop wheat. Yes, despite Kansas and Oklahoma being dry as they are, because in the end, this is what would have probably created a $10, $11 market if Kansas and the Nebraska and Texas area didn't get some rain soon. So long story short, logic is not running the market right now. Euphoria is running the market, and it will turn on a tweet. It will turn on the thought that there's a truce possibly being set between Ukraine and the Russians. And the reality is, whenever that truce date comes, they know they can clean the mines out of the waters of the Black Sea near Odessa and Mykolaiv within 30 days or less, and grain can be moving again. But the military operations have to stop, and they will, because this war that you're watching is friendly generals who are not trying to kill each other, but capture each other. Because the generals of Ukraine went to military school in Russia back in the late 80s with the military generals of Russia. They know each other. And by virtue of our employee who came from Ukraine, we're getting video feeds out of Ukraine, and that's the stories we're getting about. It's a friendly fight, so to speak. It's the Nazi portion of the Russians that are doing the shooting and not caring. But in general, it's not mass destruction of property and life. Now, moving forward, let's take a look at some charts, make a guess at some euphoric, explosive attitudes that we're seeing out there, and take a look at corn and beans, which are not responding to the current pinch in wheat. Here's Chicago wheat, the garbage wheat, and that proves that it's speculatively led because now the garbage wheat is worth more than Kansas and worth more than Minneapolis wheat. Chicago wheat overshooting our 60-day cycle, which hit yesterday, but it's always off a few days. One thing I can tell you about our 60-day cycle, it's usually not off by weeks, it's off by days. Okay, so the reality is if the high isn't today and it isn't tomorrow, maybe it's Monday, but this parabolic move doesn't last long. And what follows is an immediate parabolic decline. And so if we look at the monthly charts, we can see that the Chicago wheat is already trying to gun for its all-time high at 2007. Different conditions existed back here. Our personal stocks to use ratio was a lot lower than it is right now. And even if we took all of the 150 million bushels off of our carryout to handle Ukraine, we still have over 500 million bushels. And to get up to here, you have to have a carryout domestically below 400 million bushels. So wheat Maybe another day up here, something at $12, maybe a little more, could probably be the stop of it. As we go to Kansas City wheat, again, there was our yesterday's cycle. We are in wave 3, and the move is so vertical that a lot of times 4 and 5 mesh into 3, and you don't get any of these. They all disappear. They don't even exist. We just go to a high, and then we plummet. And this whole move over time that we've been walking in, it's all over with. It'll just price out most optimum potential of price that could ever be felt, and that's where you're at. As we look at the Kansas City monthly chart, slightly higher would be the 786, and then of course 88% is near $13, but their all-time high was just like Chicago wheat, near $14. So euphoria, can it pull this off? Maybe. As of right now, if we don't take wheat up limit tonight and hold it up limit through the French milling wheat open at 3:45 a.m., we'll see. We could have what could be the top on the next day up or Monday's high. Typically, you go through a weekend limit like this, your high would then be Monday, and that would probably put us up in this range. I'd give that a 50-50 chance, not a 90-10 chance of getting there. Right now, we're burning this out. And once reality comes into place that the wheat is already planted in Ukraine, this euphoric, I got to buy wheat because nothing's going to be growing out of that region, will dispel itself, and you'll come right back down just as quick as we got up here. Now take a look at the corn. Spot May contract did pump a new contract high over yesterday, but closed back near it. As we go intraday, you can see how we're getting this grinding move now. And literally, if we are looking for $8 later on this spring, but we got to get the USDA to come clean on our carryouts, as our exports need to be a lot more than what we're seeing right now. This is probably wave 1 of wave 5. This will be a little 1. We're going to get a little wave 2 in here. That'll be wave 2, and then we'll work our wave 3 like wheat is in right now. And so with corn, even the July corn contract, all it did was double top. Went out today at 702. This could easily be finding its way back down to maybe 650. We bought corn last week down here. Wouldn't be surprised we see something near 660 come in on this next price setback. December corn could not even do any better than a 786 retracement of last week. That tells you this is a classic B wave right now. C wave decline could be a retest of last week's low near 576. Soybeans, they are being classic. Wave 5 of wave 3, your 5 waves up, ended last week. We had an A wave decline. B wave can't even get over $17. This is a 618 of this, so that'd be classic for a B, which would allow for a C wave to re-challenge last week's low under $16. And the way they went out today, pretty sad looking price. Wouldn't surprise me if the beans lead the decline until they roll the wheat market over. This is the 2-hour contract for December corn, and as you can see, today's close already, support zones are right underneath us. If this were to stumble, that's where we talked about we could see the 577 level hit. On a different note, cattle, April giving up, falling through the 200-day moving average. This is obviously the high. $10 slide through today. We took out the 200-day moving average. Just below us is trend line. But true now, after falling under 139, 140, you've got the 786 retracement of the September low, and you can see this triple bottom, which is right at 786 Fibonacci, just above 136. So this is a top. We hedged this cattle market off in that late December rally, and the market is imploding. We speculatively tried to buy it here, stopped out today. This market is telling us a recession is coming as we move forward. Feeder cattle just hanging on to the uptrend line here. Feeder cattle, this is April spot contract. This gives way anymore. You got a big ugly break coming in feeder cattle as well, unless the corn market reverses very quickly here at the end of the week or early next week. One final comment, crude oil overnight achieving over $116 a barrel, right up at the 2011, 2013, 2014 highs we alluded to in the newsletter yesterday. That could be significant resistance for now. And just like a clock struck midnight, overnight they announced that the prospects of an Iranian deal to get 1 million barrels of oil on the market a day could be struck within 72 hours. So oil plummeted $10 a barrel overnight and then bounced a little bit into the close. This could get us back to about $95 to $100 area if this comes true and oil can move out of Iran. But that still doesn't stop the upward progression of prices probably into spring, which means we'll probably see this area again because look at how many times we kissed it over those several years. So elevated prices are here to stay, but we could see a softening in the near term back to near $100. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.